Hey guys, Alessio, hope you're well. In this video, we're going to talk about what else except this recent crash we've seen in the stock markets, the sharp waterfall decline in the major markets. Could this be a sign that the stock market has topped, or is there still a likelihood to see new all-time highs sometime this year? So I'm going to dig into this particular chart you're seeing here. It's a very important chart. It has a very important meaning for the markets. I'm going to explain to you what that is, plus also these other charts as well. Should be quite interesting and important. So let's dig into these charts and explain what's potentially happening in the major stock market. Is there a potential bottom in sight? All right, guys, join me. All right, guys, welcome back. Now, as you probably saw in my previous video, I'm not in the UK. I'm actually in Tehran, in Iran. In a few days, people are going to be celebrating the Persian New Year here in Iran. So I'm going to be enjoying that with my friends Human and Sarah here. Now, some weeks ago in the member videos, I warned that if the stock market, if the S&P was to drop down below 5827, the level you see there, then that would trigger a Dow Theory bearish signal. And if that occurs, which by the way it did, then I said we could potentially move lower to the 5,600 to 5,500 levels, near the levels which we dropped down to just recently in this recent crash. I would say that if indeed the stock market were to breach and close below 5827, that would mean increasing downside risk into this zone, into the lower zone down here between 5,700 to 5618, and potentially even lower levels. I mean, there could potentially be even a further drop to the 5600 to 5500 levels as well. But these are, I would say, the more likely support levels that could get tested. Now, the question people are asking right now is, okay, this has been a very sharp waterfall decline. And on certain readings of the RSI, we're actually oversold, quite heavily oversold. So there is potential for a bounce. We've seen a bit of a bounce so far. But as we know, a bounce or a rally by itself is not enough to show that the price has bottomed, that the stock market's bottomed. By the way, guys, I'm sure some of you are probably saying to yourself, well, Alessio, isn't the sentiment, isn't the fear greed index right now an extreme fear? I mean, it is true. Some of the sentiment readings from the AAII have shown that we're seeing a lot of fear, excessive fear, which typically comes before some kind of a bottom or a bounce. However, guys, even though certain sentiment readings have been showing excessive fear, there is actually one major survey or one particular sentiment reading, which is the survey of money managers, as you can see here on this chart. Notice that this sentiment reading is currently not showing a lot of fear. It's not showing the same levels of fear we had in the bottom we had in 2023, as you can see on the chart, and also in the COVID crash of 2020. Okay, so compare where we are at right now at those levels between 60 and 70 and where the sentiment reading was a few years ago, for example, before. So back in 2023, when the major drop occurred in 2023, notice that the sentiment reading, the fear among money managers was below 50 on this reading, on this particular index. So that was a lot of fear, but we're not even close to that. Now, back in 2020, in the COVID crash, okay, there was a lot of fear. And notice in that year, the sentiment among money managers was to an extreme level. You can see right there. In fact, practically all money managers had sold and got out of the market. And by the way, that occurred right before the market bottomed. But guys, right now, according to the sentiment reading, we're not even close. We're not even down to those levels. We're not even below 50% on this particular chart. So quite possibly what this chart is showing to us that among money managers, at least, there is not a heavy amount of pessimism or fear, at least not as much fear as we had in previous years, like in 2023 and in the year 2020, when those major crashes and drops occurred. So one way to interpret this chart is perhaps to say that maybe the market has to drop further before the sentiment reading among money managers becomes to an extreme low. And remember, guys, money managers can be among the herd, can be among dumb money as well. Now, let me just say this. There are people at the moment who are saying that the market has bottomed, okay, that this dropped down to just above this trend line support and near the 61.8% golden ratio retracement, that this is an important level near 5,500 and perhaps we may have bottomed. That's what some analysts are saying right now, or seem to be saying right now. But guys, to be honest with you, I'm not yet convinced. So even though we're seeing extreme levels of fear on some sentiment readings, like the CNN Fear and Greed Index and also oversold conditions on the RSI, and coming down to some levels of support, I think it's too soon as yet to call a bottom. And guys, as you know, a one-day rally and bounce in the stock market does not make a bottom. So I think we need to see this play out a bit more. We need more information from the markets. So the next bounce and rally in the stock market is going to be extremely important. So my question really is this: what's going to be the nature of the next rally in the stock market? So we have to watch the S&P very closely. We have to watch the Dow Jones very closely. And perhaps even watch Bitcoin as well. Now remember, guys, in a previous video, my friend and trader Manuel Blythe, the Dow Theory, he was absolutely correct. He said that when a Dow Theory bearish signal or a Dow Theory sell signal gets triggered, which occurred on the 4th of March, then that suggests more downside. It suggests more downside risk. Let's have a quick reminder of what he said.
And you can see that the average decline after a Dow Theory sell signal is a further 11.22%. So it means that there is still significant, on average, downward price action. So when we had a sell, there is still lots of room for the stock market to fall. Furthermore, more important, the probability of a bear market following a Dow Theory sell is 60%. In other words, when you get a sell signal, 60% of the time, it will be followed by a real bear market, the real thing. So this is really a big warning sign.
So guys, as you heard, Manuel Bly correctly warned that when a Dow Theory bearish signal gets triggered, it does signify potential more downside risk. And we've seen the market drop by a further 4.5% from the time of the Dow Theory bearish signal to the lows that we made just recently. Now, remember, if the market follows through with Manuel's warning, if the market falls by 11%, again, the average drop after a Dow Theory bearish signal, that would suggest that perhaps we've not yet reached a bottom. Now listen guys, I don't know yet at this point whether the market's bottomed or not. It may have done. Again, it's very difficult at this point to say. We need more information from the market. All we can say is the market dropped down to a level which triggered a lot of excessive pessimism, according to some surveys, not the money manager survey, but other surveys. And also we've seen oversold conditions on certain, like the MACD. Notice the MACD dropped down to a support level not seen since the year 2022, when that previous bottom occurred in the year 2022. So there is potential. I mean, certain signals like MACD and RSI are suggesting that perhaps we could be getting close to a bottom. But honestly, I cannot say with 100% certainty or even a 90% probability that the market's bottomed. Again, it's too soon to call. All I can say is at the moment we've reached certain levels of extremes where potentially we may form some kind of a temporary bottom and some kind of a rally or bounce. So some kind of a big bounce could be coming, if not soon, then perhaps in the next few weeks. And that bounce, by the way, could take us to the 21 weekly moving average, perhaps close to the 5,800 levels. Now, personally, for me to be convinced that the stock market's bottomed, I would say one of three things needs to happen. Either we reach a point of capitulation. Now, capitulation does not mean a bottom in the stock market. Capitulation has a much more exact, more precise meaning, which I covered in a previous video with Manuel Bly some years ago. Go ahead and watch that. I'll put that video in the description, so go ahead and see that. Capitulation is a region of forced selling, and we haven't yet reached the criteria for capitulation. Again, remember, capitulation does not mean a bottom. But I think if the stock market was to continue this sharp waterfall decline, if, for example, it continued to make lower lows, further drops down to deep oversold conditions and faster, then potentially we could reach capitulation in the next few days and weeks. The second criteria which potentially could signal a bottom would be, let's say, a Dow Theory buy signal or a Dow Theory bullish signal, which we have not yet seen. And it's too soon for that. Check out Manuel Bly's newsletter for that. Now, the third criteria we can look for is if the stock market was to rally, let's say impulsively, on the lower time frames, and then rally above, let's say, 5850 and 5900. I would say if, for example, the stock market was to make a move above the 21 weekly moving average, which I know is quite further away right now, but let's say the 21 weekly moving average came down further lower, and let's say the stock market, the S&P, went strongly and with conviction above the 21 weekly moving average, that could be a positive sign, a good sign that the market may potentially bottom. So perhaps if we see some kind of a strong, impulsive move, a rally above 5850 and 5900 on the S&P, that could be a good sign, a positive sign that the markets may have bottomed. But I do think given the strong oversold conditions we've seen so far, given that the MACD is extremely oversold, the MACD has fallen to levels not seen since 2022, the lows of 2022, for example, there, and the RSI is extremely oversold, this is a sign that potentially the market, the S&P, could be reaching a point where we may see a strong bounce, a strong rally, and maybe potentially getting near a bottom. Again, we shall see. Again, it's too soon to call that. So the three things I'm looking for is either capitulation, or two, a Dow Theory bullish signal, or three, a strong impulsive rally above resistance, like 5850, the 21 weekly moving average, or something like that. And I would say the fourth signal I'll be looking for is if this particular sentiment reading among money managers falls below to extreme levels. Again, we need to see extreme levels of fear as according to this chart, at least below the 50 level. So guys, from here in Tehran in Iran, I want to wish you a fantastic and phenomenal Persian New Year, which is not far away. All right guys, thank you very much indeed. I look forward to seeing you next video.